Ladies and gentlemen, welcome.
Just stop. Just stop. We are here to discuss the tobacco company of technology. Tanner, can you guess what that is? Because it is the least inspiring technology company that we're invested in at this point, is what it feels like, even though it shouldn't feel like that.
Yeah, we're going to talk about PayPal today. But it had great earnings. You're giving it too
Great
much.
earnings.
Great earnings.
Great earnings.
What'd you think?
I thought the earnings were inspiring. They were powerful, but the market still feels like PayPal's a tobacco company. It's crazy.
Yeah. No, I mean, there are some risks that people feel are coming from Apple Pay and other digital wallets that might take away from PayPal.
I don't think that it holds any water anymore. And look, I'm not saying that this does not have risk, okay? Like every investment has risk. But if we've seen anything, it's that transactional payment volume continues to expand. PayPal's revenue continues to expand. And every new competitive force that occurs, somehow PayPal finds a way to expand its revenue. So until somebody starts taking away PayPal's business, all those bear cases are null and void until they actually matter.
And you got a lot this quarter for what you wanted, right? I mean, let's talk really quickly about the elephant in the room for you.
Alex Chris and how he just wanted to shut me up. Yes, he did. And thank you, Alex Chris.
He did buybacks, ladies
He
and
had to
gentlemen.
have heard me or read one of my articles where I was screaming more buybacks and just to shut me up. He didn't give me as much as I wanted, but he did the right thing. And unfortunately, I think he needed to make a bigger statement with it. I think if he did make a bigger statement and we met in the middle somewhere, maybe 2.5 billion, me in the middle, maybe the market would have taken it more seriously. But he did the right thing. I'm a little surprised that and look, PayPal has gone up a good amount in the past 2 days, but it's nowhere near where it should be trading.
Okay, but there's also more quarters to do more buybacks that are above expectations, like they did this quarter.
And I'm not saying they should have actually spent the money. I'm saying that they should have announced.
Got you. I think because whenever Alex Chris and Jamie Miller first got on the scene, they said, we may do more buybacks, but we want to have the flexibility of not being able to do that. And I just don't think that they want to get the market excited by saying, hey, we're going to do 8 billion of buybacks this year. And then them actually realizing that they have opportunities to go after in the market for actually growing the company. I think that they still could do 8 billion. They just might not, rush into it.
But they don't even have to do it. They could and still go after market opportunities. Let's give exact numbers. Okay. So hold on. Let's actually bring up the exact numbers so we don't botch anything.
Sure. While you're bringing that up, Steven actually wrote this article. This is why we're talking today. PayPal's Q2 earnings should trigger a flurry of upgrades after increased buybacks. That's what he wanted this whole time. He puts a strong buy on the stock, which I think is something that I'm going to have some pushback for him because he made some comments that didn't seem strong buy-esque, but we'll talk about it.
Well, the bottom line is that they have long-term debt of $9.73 billion.
Mm-hmm.
Okay. That's basically nothing for a large cap stock. When you are generating on a quarterly basis, 1.65 billion in EBITDA. That's not a lot. That's quarterly basis. Now, the actual balance sheet, they have 7.7 billion in cash on hand. They have another 5.9 billion in short-term investments. So your on-hand liquidity that can be tapped is $13.6 billion.
Mm.
So just on-hand liquidity, you exceed your debt obligations.
Right.
Then they have another 4.65 billion sitting in long-term investments.
Mm-hmm.
So here's my thing. You don't need that cash sitting in long-term investments. That's just churning you interest income or whatever it's invested in. I'm going to assume it's some type of T-bills or something. There is no reason to have that money there. Buy back the shares with every last dollar you have on long-term investments. And here's why.
They got some pretty good equity stakes as well, though. You got to give them credit. They've made some pretty good public investments into companies that have skyrocketed.
I'm not saying that they haven't, but what I'm saying is shares of PayPal are trading like a tobacco company. So when I wrote the article, and I'm going to go by the numbers from when the article was, because that's where we were. We didn't have the bump today. But when I was writing this, PayPal was trading at 15.11 times 2024 earnings. Okay. Philip Morris, what industry are they in?
Cigarette company.
That's right.
Tobacco.
People don't necessarily like tobacco.
Mm-mm.
And people look at tobacco as no growth, the minimal growth, right?
Sin stock.
Exactly. Doesn't necessarily get the highest multiple.
Mm-mm.
Yet they're trading at 18 times 2024 earnings.
I may lose this, but I'm going to look it up anyway. I wonder what their total shareholder return
equity
is per year.
That I don't know off the top of my head, but even looking at the 2026, Philip Morris trades at 15 times earnings and PayPal was trading at 12 times earnings yesterday. So I think that the market is significantly undervaluing PayPal, especially with them increasing their free cash flow generation for this year. I mean, this is a highly profitable company. I still stand by what I said. The bottom line is that they should, in my opinion, increase buybacks. And if the market doesn't value them appropriately, just take the company private, because this is crazy. The multiple that is being put on them is crazy. $65 billion company? I mean, come on.
I'm still just looking up. So about the buyback yield for PayPal is roughly around 8% of their total float. The total shares outstanding, sorry, I should say. Roughly 8%. Philip Morris has a dividend of about 4.5%. So if you're talking about the total shareholder return, you're actually getting more from PayPal, faster growth, and in an industry that people might not fear as much. But maybe that isn't the case. Maybe people
but I don't know if you can actually say shareholders are getting that, because the market's not actually giving them the value in the shares. So for them to recognize that value in the account, the stock needs to actually move higher.
Well, you're getting
it
in terms of the
and I understand what you're saying, and I agree with you, but it's not reflected in shareholder accounts.
Yeah, but you're getting it in ownership. So
you're getting it in ownership, and that's why I agree with you. But unfortunately, it's not translating to actual dollars and cents.
Yeah. I just find sometimes people talk about like, oh, well, buybacks aren't worth as much because it's artificially increasing earnings. I'm like, no, it's
not artificially. They're using real dollars to buy back shares, which is increasing your future EPS.
Yeah.
As long as you generate the same amount of profits.
Yeah, those are your earnings per share that's going up because you own a larger slice of the pie than you did previously. Yeah. Anyway, sorry. I'm just pretty happy with PayPal. I think that this is one of the best growth stocks at a reasonable price, right? I don't think that this is the fastest growing company, but it's at a very reasonable price that makes it a strong buy to many investors.
Yeah, I think that for me, I think a fair value of this is $83.50, and anywhere between 80 and 100 is just, I don't think it's overvalued at this point. I'm not saying that should be a $200 stock or this should be a $150 stock, but I do think that at about, I think I had it at 80.50, it would trade it just under 20 times earnings, which is not crazy.
No, I thought you were being very realistic. Like, I think a lot of people do put that $150 price target, and you said no, forward multiple of about 16 times. You're still way below.
Yeah, like 83.50 puts you at about 20 times 2024 earnings, and it puts you at just over 16 times 2026 earnings, which is still trading where Coca-Cola and those companies trade. So
yeah. Which are still
I don't think I'm being unreasonable with those projections.
Yeah, you're not placing it anywhere near Visa or anything like that.
No.
This is directly from your article here. Placed around 83.50, giving it a forward multiple of about 16.35 times. Philip Morris does about 15 times.
Yeah, I mean, I don't think that that's unreasonable, and I think that this is a good look. This has been a broken stock, not a broken company, because it's not a broken company when you keep increasing revenue. And I still believe that people are focusing on the wrong numbers and the wrong headlines, and people are looking at what you said a couple of minutes ago about Apple Pay or this or that, and then they start looking at the worst numbers to look at, which is active accounts, worst number to look at. I don't care if they have 429 million active accounts versus 435 million a year and a half ago. I don't care. I care about transactional volume.
Hmm.
I don't care that the take rate is down 10 bips over the past year. Okay. So what? The take rate's down 10 bips, but your total payment volume has gone from what is it, $354 billion to $416 billion. It's grown 11% year over year. Yet people want to complain about 10 bips on a lower freaking take rate. It's just people are looking at the wrong numbers, and I think the narrative about what may happen with Apple Pay or what may happen with Google Pay or what may happen with this or what may happen with that is controlling the narrative instead of focusing on the actual numbers that PayPal is producing. And that's why this stock becomes such a frustrating stock for so many people, because you look at the underlying fundamentals and there's no rhyme or reason why it should be trading at this level, yet it's been stuck for quite some time.
Now, you did also bring up that although you might not care about active accounts, you did bring up the difference between the active accounts and the monthly active accounts and the activity rate between them, which was actually trending pretty positively.
Yes, it was.
I'll just bring this up. It's not charted as beautifully as I'd like it to. It's just the actual supplemental.
So
Uh,
sorry, Tanner. So sorry.
yeah, no, this is just from their. I'm on their thing. But if you look on monthly actives, this is what I like looking at from Q3 of 2021 all the way through. There's this crazy declining percentage of growth. And then that sort of trended this way. But now we're finally starting to see re-acceleration. Also, similarly, what happened to their overall accounts started to really depress to their lowest numbers, now starting to re-accelerate under new management. So maybe Alex Chris does fit the bill for SoFi.
For SoFi.
Sorry, for PayPal. See,
For SoFi.
even before the thing, I was like, I have a hard time switching between topics. I just came from a SoFi video.
Look, Alex Chris got a lot of points with me this quarter, so I'm not going to say what I would have said last quarter.
He called me angry one day about this management not boosting up the buybacks. So I think they are tapping the phones or something. They gave you enough, a 20% bump.
Yeah, listen, I'm not going to complain about it. I'll take what I can get, and I think that he did it just to spite me, just to shut me up, which he did. Good.
An extra $1 billion is no small feat. I mean, that's
No, it's real money, and it should make a difference. I mean, you look at what they've done this quarter. They did, what was the number? I just had up. How much they did, how much in buybacks this quarter?
1.5 billion.
They did 1.5 billion in buybacks. They're increasing their free cash flow to 6 billion. This is a company that, I mean, as of yesterday, was trading at 11 times free cash flow. That's insanity.
Yeah. Yeah. No, it is crazy, but they're stuck between this idea that they might end up being replaced, even though they're growing quite aggressively.
And I think that's what people need
Not
to,
aggressive.
or I would love to see a comms person at PayPal actually put something out about why vendors want to use PayPal.
Mm,
Because Apple Pay, people are going to use Apple Pay at the checkout register at certain places when they have their phone, they don't want to carry a wallet, or they just go for their phone instead of their wallet because it's a more natural thing these days because everybody just goes for their phone. It's glued to everybody's hand. But from a vendor side, a lot of vendors utilize PayPal for online payments.
Hmm.
And that PayPal is still the choice of a lot of vendors, and that's what really matters.
Yeah, no, it's incredible. And even if you like, you were talking about total payment volume growing, it wasn't just like international. Like no one talks about using PayPal here, but yet US TPV was skyrocketing this quarter. Like they are growing here. It's not like some place where we don't know. It's they're doing well in this country as well. And I mean,
I mean,
I would use
do
them
I
more.
care where the growth is coming from, or do I care about the numbers? I care about the numbers.
Well, I think on a currency neutral basis, it does matter. It's a little bit safer. The tax rates for international versus themselves versus bringing it over. It is better for it to
Look,
be here.
would I like it to be at a better cost basis from a tax efficiency standpoint? Absolutely. I'll take what I can get. And the bottom line is that revenue is growing, free cash flow increased, and that's what we want to see.
Sure. Now, what about that EPS break or the expectations versus reality? I mean, Wall Street was looking at 98 cents, 99 cents expected. We saw $1.19.
It was a pretty big beat.
And how are we not seeing that related in the analyst stock prices just yet? Like, I mean, that's a beat by 20% surprises.
I mean, the bigger question is how come we're not seeing the forward guidance play a role? I mean, they previously guided for 365 for the year in GAAP EPS, not even non-GAAP. GAAP EPS, they got it for 365, and they just increased the range to 388 to 398.
Mm,
So that's not even coming in.
yeah. Yeah. No, it was a phenomenal quarter. I hate that they actually announced it on the same day as SoFi because I would have loved to have covered it.
I think this is the worst week for SoFi to announce earnings. I'm going to email Noto, not that he's going to care, and tell him you should really not announce it the same week as big tech because your story gets lost in the narrative. And I feel the same way about PayPal. It's just the worst week. You had a Fed meeting, and you had Meta, you had Microsoft, and now we're going to have Amazon and Apple. Worst week to report.
I mean, so that does lead me to believe that you are kind of sensitive with this stock versus others about the short-term movements in the stock price. You had written some statements that I wouldn't have thought that you would have wrote about.
What I was going to
Stock
exit
move-
if I
Sorry?
that I was going to sell the position.
Yeah, if it didn't move this week.
Well, what I had said previously, forget what I said in the short term. Previously, I had given this 3 to 4 quarters to gain traction, or I was going to consider it dead money and throw the money somewhere else.
Right.
Because I don't like doing. I'm not a trader. I don't really like short term plays. But this is something that I really felt had really good value and upside.
Me too.
But look, I can't beat the market when it comes to getting the market to agree with me. So sometimes I gotta say, listen, this is gonna take too long. My money can do better somewhere else. So I have a decent sized position. It's not my biggest. It's probably not even in my top 10 positions, but it's a decent sized position. And I said, I'm going to keep the money in there for a year, maybe a little longer. I'm going to write cover calls on it, generate some income, and hopefully it moves. And hopefully I have to roll my options. And what I had said, I believe, I'm not looking at it, but I probably said something along the lines of if this earnings report doesn't inspire some confidence and the stock doesn't move up, and if it breaks below 60, I'm going to have to consider it a completely broken stock and really consider selling at some point, much sooner than I would have. And I'm glad that I got proven wrong and that I had to roll my options today. So I rolled them up and out. So I had $65 options for August 9th written. And I ended up rolling out of them and went to October 10th, I think, at a 70 strike.
Wow.
So
Yeah.
I'll be in it till at least October at this point.
You find that you were playing a little greedy going to the $65 or what?
No,
No, happy to roll?
I wanted to roll.
I know that you wanted to roll, but that also means that you're stuck in a position that a second ago, you know. You might be stuck in it for a much longer period. Like, what if it heads back down to,
Okay, so I'll buy the options back and sell the stock if I need to.
all right,
All right. So I hate what I'm thinking in my mind. I'm not going to say because I'm going to come off in a bad way. So I'm going to rephrase it. And what I'm going to say is
don't say what you're going to say.
this investment is a much smaller investment than others in my portfolio.
Okay.
So if it goes down, it's not going to be as impactful as something like Meta going down. So I'm not too worried about it having to go down and me if I decide that it's not worth it, either wait or just if I feel it's going to keep going, just buy the contracts back because they really don't have a huge enough premium where it's going to matter. My SL Green contracts have a premium that matters, and I need to figure out what I'm going to do with that. This premium is not big enough to even sweat it.
Gotcha.
So,
yeah, no, I think that. What else did you write about that you found very concerning? So, I mean, you were just sort of writing about the price mismatch versus other stocks, and
I
that
think there's a big disconnect between what's reality and what is emotions or opinions.
can I bring this up really quick?
Bring whatever you want up. Yeah.
Okay, so tell us what we're looking at here.
And look, this is from yesterday, so this doesn't include the bump we got today.
Okay.
But when I looked at big tech, which is the Mag 7, I threw Visa and MasterCard in there, and I put tobacco in there. So to be fair, out of all these companies, the only ones I'm not invested in are Philip Morris. I don't know if I have Visa or MasterCard individually. They could be in one of my wife's accounts.
You have BTI and Altria?
Yeah, of
Okay.
course.
Of course.
Big dividends, big
Oh
dividends,
my gosh.
big dividends. Um, I feel like Visa or MasterCard could be in one of my wife's accounts, so I may be invested in one of those. And I don't believe that we're in Microsoft, but I'm in everything else. And look, this is something where PayPal has 22.6% earnings growth projected by the consensus estimates from the close of 2024 through 2026. So they have more growth than Philip Morris, yet they are trading at a much lower multiple on a forward basis every year 2024, 2025, and 2026. They trade like a tobacco company, not a tech company. I mean, Alphabet, which I think is the biggest steal in the Mag 7 at this point, I mean, they're trading at 22 times earnings.
Right.
I mean, I think that that's a no brainer. I actually bought more of that last week before they reported, but I'm sorry, I bought more after they reported when they went down because I thought the market got it wrong. But I think there's a lot of value in PayPal, but I could be wrong because the market hates it so much. And there's this narrative like this could be a broken stock for years. I'm not going to be in it for that long.
Yeah. Yeah. No, I'm stuck between that position as well of like, it almost makes it more rewarding if it stays down and continues to grow. But at some point, is the growth
I
still
need to make
worth?
money on it at some point.
Yeah. Yeah.
And here's why I say that because I could take that money and I think SoFi is so undervalued right now that I would consider just buying more SoFi. I would consider splitting it between SoFi, Alphabet, and probably Amazon at this point.
Are you going to be writing a SoFi article or what?
I may or may not have already wrote the first 458 words. Killer quarter, quadruple beat. I'm sick of people saying double beat. They didn't do a double beat. It was quadruple beat.
What's a quadruple beat?
Quadruple beat. If you don't know what the quadruple beat was, you're not a real SoFi fan.
A triple beat to me is a beat
No,
on
no, no, no. This
beat on
wasn't a
bottom
triple
line and
beat.
beat
This was
on guidance expectation.
quadruple beat. Adjusted net revenue, they beat
Okay.
the top end of guidance. Adjusted EBITDA beat the top end of guidance. Adjusted EBITDA margin beat the top end of guidance. And GAAP net income beat the top end of guidance. Quadruple beat.
Okay.
Boom.
Boom. Jeez.
And then
All
you
that
look at
work.
their high end guidance for Q3, it's off the charts. 645 million in revenue for Q3 alone. This is to be the first quarter they break 600 million in revenue. And we know that Noto sandbags, and he is probably going to come in higher than that.
Yeah.
He gave us a range of 625 to 645, and he came in with a range of 160 to 165 in adjusted EBITDA. You got the margin going up to 26% on that.
Yeah.
And I wouldn't be surprised if we see 175. And GAAP net income of 40 to 45 million and diluted EPS of 4 cents. I mean, I won't be surprised if we see 5 cents. I won't be surprised if we see 4 cents. But
Well,
this guy,
surprised if we see 6 cents.
he doesn't miss.
No.
Like, this guy does not miss. His team does not miss. And anybody
13
that
straight
listens,
quarters of beats.
anybody who listens to the conference calls, this guy had a mic drop moment in his closing remarks. Anybody who's a SoFi shareholder should be fired up right now, because that's the type of CEO you want leading the ship.
Yeah. Yeah.
And
I think he got that picture. I think a couple people were a little bit slowed down from the last quarter, and he was like, all right, we have to tell them what we've been working on, because we are working and we're doing some pretty incredible things.
Yeah, I mean, this is just, when you look at 2024 guidance that they gave, net income of 175 to 185, adjusted EBITDA of 605 to 615. Really think about that for a sec. So we are on a trend where we should hit $1 billion in adjusted EBITDA over the next 2 to 3 years, roughly. When you think about where we were in the past couple of years, and we're going into a lower rate environment that is going to probably work out in their favor, because the housing market will eventually become unlocked. So I'm pretty bullish, to say the least, on SoFi, and it's getting harder and harder to stay with PayPal and not just roll that in, because I see a lot of potential. I think the market's grossly wrong, and you got to respect the members. If this was not a product that people wanted to use, or did not enjoy using, or did not feel that it was worth using, you would not see member increases the way that they're increasing. You wouldn't see revenue increases the way that it's increasing, and they wouldn't be growing profitability. So I don't care what the bears think. I don't care what I think. I don't care what you think. I care about the numbers. And the numbers show a trend that is going the direction that I want it to go in. And if you look at a forward basis, look at how much growth is on the horizon with EPS.
Yeah. Yeah. And have you seen what Wall Street is saying for EPS? They increased their expectations for 2026 from 44 cents to 48 cents.
Good for them.
SoFi is saying 68 cents in the mid-range, and that's if they don't beat it.
Probably a good chance they're going to beat it.
Probably good chance. Probably
good chance. I mean, they got a lot of levers that they can pull. There's a lot of things they can get into. I am personally not signing up for a credit card, because I do not want SoFi paying me anything. I would rather, have my credit card company give me my rewards points. I'm not taking that away from one of my investments.
Dude, they can stomach it. They want it.
I don't want them to stomach it.
Do it, because they'll make more. They'll make more.
How are they going to make more? I pay my bill in full every month. How are they going to make more?
That's fine. They get interchange revenue. They'll be good. They'll be good. They'll be fine.
So I will be a profitable customer for them?
Let them learn how to underwrite customers. Let them see your information. I promise you,
I'm worried that I'm not going to be a profitable customer. That's why I wasn't going to get the credit card.
I think you'll do fine.
But if you tell me that I will be a profitable customer for them, I will sign up for a SoFi credit card.
I mean, there's ways that you can be an unprofitable customer on the credit card side, but you'll be fine. The more customers, the better. They want high-end customers for their credit card segment. That's what they want.
I'll sign up.
Do it. That's what they want. And then also, they might even end up cross-selling you into other products. They might get, what?
I doubt that.
Who knows? You might be switching from Thinkorswim to SoFi Invest.
Look, I would love to move into the SoFi environment, but everything is on autopilot. My wife does all of our bills. We're not going to be changing.
You should.
You know,
Because then you would be a very valuable customer, would be a checking account.
look, I would love for them
Ooh,
to. I would love to have SoFi as my prime, but my wife is very happy with where we currently have everything set up, and I don't want to mess anything up. So, you know,
that's
she's
okay.
happy, I'm happy.
Yep. Yeah. They released 2 new credit cards. What else? There was a couple other great things. They talked about launching a product that would allow company or um, employees, customers, and partners of a company to purchase stock in private markets, but through SoFi.
Yeah, we need more context on that.
I've got enough context. Think about how they like they're essentially setting up a private market and offering equity to individual customers. You can't wrap your head around that?
No, I can wrap my head around it, but we need more context. Are they allowing employees to sell warrants to SoFi and then SoFi sell those warrants of private companies to private investors? How is it
Mm,
going to work? I mean, we need more context around it. So, as
yeah.
a SpaceX employee going to say, I have X amount of shares. I'm going to sell these on the private market because it's not currently a public company, so I can't liquidate them and get cash. And then are those shares? Because I've been
No, I don't think it's
approached
that.
by, well, there's multiple companies that you can invest in that you can get private company investments in.
Yeah.
So that's
I
how
think
they
it's
get those shares.
I think it's to streamline that though, make it much easier.
Look,
Like you don't have to make phone calls,
hopefully
you can do it directly through an app.
that would be nice. I mean, I want business banking, like real business banking.
Yeah, yeah, I think that'll be coming. I think that'll be coming. But overall, I think the guidance growth was the most exciting thing, obviously. Just the overall success of both companies, both PayPal and SoFi.
Yeah, I'm a fan. SoFi is man, they're firing on all cylinders, and I would be scared if I was a short because 17% short. This thing is a coiled spring. It's been a coiled spring, and at some point, the market's got to admit that they got it wrong.
Even after earnings, there was something like 26 million more shares borrowed.
I
Like
just I don't understand why people like what are we not seeing here?
going into interest rate cuts.
Going into interest rate cuts. So once again, this is a company that had student loans taken away from them, running at half mast, 50% capacity.
Home
They
loans taken away from them after that.
home loans after that with high rate environment. They had to build out an entire new infrastructure and product line while they figured it out. And boy, did they figure it out. And look at the company they've built. And we're going to enter a low rate environment. And SoFi's firing on all cylinders now. And you're telling me that this is like people are still shorting? It's crazy.
I think home loans is that sneaky product. Like I think people need to
Sneaky.
really listen to what management is saying. They brought up home loans like 6, maybe 8 different times on that call, and it's their smallest lending product right now. It
Yes, it is.
broke it broke records for the amount of originations, and purchase loans was like way above expectations, and that was on interest rates that are the highest they've been since they've offered that product in the first place. So it like if you're seeing that growth now, imagine what home loans are going to do 2 years from now. It might be their largest originating product.
It's going to be really interesting to see what happens with it. And
So
look,
interesting.
I want to see where we are in a year from now. I want to
Mhm.
see where we are when we start cutting. You got to think in a year from now, rates are going to be under 5. You got to think they're going to be close to 4.5 at that point. And where do we go from there? I mean, there's a lot of levers to get pulled, and this is a company that is profitable. They keep growing members, they keep growing deposits, they keep growing revenue, they keep growing profitability. And if they continue on these trends, what's the bear case?
Yeah. Yeah. And guidance from the beginning of the year, they said they'd bring on 2.3 million members. So we can expect an additional, and that's if they don't beat, which they will.
They're
My
going into football season,
Yeah, an additional about 650,000 new members a quarter for the next 2 quarters as well.
and we haven't even got their golf league up yet.
Yeah, that comes January.
So there's a lot on the horizon in the next year. I don't know how. Look, I don't know how you can sleep at night shorting. I don't play every time I want to play the don't pass and craps. I never do because it's bad karma. I don't know how people can do it. I don't. I mean, this is SoFi. People must still think this is a student loan company. That's the only thing that makes sense.
I mean, I think they think it's a very risky personal loan business now.
I don't even think they read the earnings report that much to know that personal loans exceed student loan originations. I think that the people still think this is a student loan company.
I mean, I hope those are the people I'm betting against.
I hope those are the people I'm betting against at this point, or we
But
should say investing against, because we're not really betting at this point. We've been shareholders for a long time.
well, yeah. Yeah, you're right. You're right. And I want to be a shareholder for many more years to come for SoFi. I
Same
don't feel
here.
the same way about PayPal.
Oh,
However,
they're not in the same category.
that being said, you said with PayPal, I may want to um, sell shares of that in order to just end up buying SoFi, something that you'd rather hold. But on earnings day, PayPal ran, SoFi didn't. They immediately got cut back down. So if we're talking about broken stocks, which one takes the
They're
cake?
both broken stocks.
Yeah, I know. So why hold either one?
Why hold either one?
Well, what I'm saying is if you don't want to hold PayPal because it's a broken stock, why rush that money into
That's not
rush it into SoFi?
the context I put it in, though.
Okay,
The
tell me.
context I put it in was that if it retraced below 60, I would have to seriously consider exiting because it could be too much of a broken stock for me to stick with at that point, based on what the earnings were.
Do you have a price like that for SoFi?
No. SoFi goes down, buy more.
That's what I'm saying. What differentiates them in your head?
Well, one, I think that PayPal is going to have a very hard time getting past 110, 120, 130. I don't know if it even gets there in the next year or two.
Sure.
Okay. Can SoFi get to 14 in a year? Yeah, it can.
Mm.
Is it going to? I have no clue. I think there's more upside opportunity in SoFi. And it's something that I think, one, people are going to hate this, but it could get acquired by somebody. And I know there's an argument that if it was going to, the bank would have done it already, but that doesn't mean that you won't see consolidation in the future. And then, I mean, just look at oil companies. There's been plenty of times for Exxon or Chevron or Conoco to acquire companies, and you got acquisitions going on. So an acquisition can always happen. Not that I want it to happen, but I think SoFi has a lot more upside potential than PayPal, and I think PayPal is a hard double, whereas SoFi is not necessarily a hard double. And I just think that there's a better ROI opportunity on my money in SoFi than PayPal.
I think that's really well said. One thing I wanted to bring up because I thought that this was very interesting. Bank of America could have been a very good candidate for just scooping up another American bank, but they issued a $25 billion stock repurchase program. This repurchase program could have been maybe enough to acquire SoFi,
Could have been.
right?
Yeah.
It may be in that ballpark,
Yeah.
at least for a conversation.
I mean, what's the market cap now? 6, 7,
Uh, yeah, maybe 8.
maybe 8.
Yeah,
Yeah.
Tripling for an extremely fast growing company. So with Bank of America though, this is what Wells Fargo did. They did a $30 billion buyback program. Bank of America does a 25 billion. I don't think they are looking
And
at
they
a
may not be. And that goes, and I'm not investing in this for it to get acquired. I'm just saying that it's a long shot, but it could happen. I mean, I think that there is a value opportunity here where you have double digit growth in EPS year over year for a lot of years going forward in this name.
yeah.
And at some point, if Noto, really think about this for a sec, if Noto achieves what he says he's going to achieve and what we think he's going to achieve, this is going to go from trading at what 150 times earnings to 10 times earnings in 3 years.
Yeah.
Like, really think about that multiple.
Well, this is what I was doing with Nubank. You should have seen the comments whenever I was holding Nubank, whenever they had a 500 PE. People are like, how could you possibly? And now they have like a 25 PE. And That's what happens whenever you have a company that's growing that fast. You know,
Yeah, I think that this
think
is
PayPal or SoFi is really going to hold up this price forever? They're growing so fast.
at some point shorts are going to lose money. They may not be next month, but at some point you got to think they're going to lose money.
Yeah. Yeah. So where does SoFi land in your portfolio? Is this becoming a bigger name for you in terms of like how much you're allocating? I don't want numbers or percentages. I just want to know, like, is this a big part of your? Is
It's
this a big
definitely
part?
top half.
Okay.
There's
All
no,
right.
I don't think there's a question. Oh, so let me ask this: are we excluding retirement accounts? Let's exclude retirement accounts.
Sure, but you have
If-
that just in broad market indexes, right?
yeah, if we exclude um, 401s and IRAs and that type of stuff, and we were just talking about individual equities, then
Yeah.
this is definitely top half of my individual equity holdings.
Okay. No Palantir though.
Palantir is a bigger position.
Maybe one day. Maybe we'll get there on the market value if it actually starts to.
So it's funny. Amit and I were talking about this yesterday, I think, on the phone. And I said to him, I said, you look at where SoFi is going to finish this year on revenue, and you look at their revenue growth, and then you look at Palantir and their revenue
Mm-hmm.
and their revenue growth,
Mm-hmm.
and you look at the market caps.
Mm-hmm.
Just saying. And I get it. Palantir's a much more exciting industry, and there's just a lot more interest. And I can, if I wanted to, spin a hype cycle, I could spin a really interesting hype cycle around Palantir rather than SoFi. But I mean, you look at the valuation that a company like Palantir is getting. I mean, it's not crazy to think that SoFi could be at 15 or $20 a share. And
No.
then the elephant in the room is Noto getting it to 45 for his RSUs.
Mm-hmm. Yeah, that's a great point. So to connect the dots for anyone that maybe doesn't know Palantir and SoFi very closely, they trade very similarly in terms of the amount of revenue that they do, around $2 billion from my understanding. The difference in market cap is like 8 billion to like 60 billion or something like this. Like it's an unbelievable difference. And that just goes to show you the difference in pricing between the industries that you're in.
Yeah, I
Meaning
mean,
AI, you're getting all those tailwinds and less risk on lending.
if everything was numbers based, investing would be so easy.
Right. Right.
But it's not. You got market sentiment, you got emotion, you got all these other factors that you got to factor into it. I mean, it's not just numbers. If it was just numbers, Alphabet would be 30% higher than it is today.
Yeah, and to be clear, the revenue that Palantir is making is much cleaner than SoFi's. SoFi has to execute every single year in order to get loans that are not risky because they can actually lose. There's not really a factor of Palantir's growth that can bankrupt them.
Palantir does business with entities that have blank checkbooks.
That doesn't matter. I don't care about that.
Of course that matters.
No. But let's not turn
Of
this
course that matters.
Okay, you're right. You win. You win. Government is everything.
The fact that they do business with the U.S. military industrial complex and they're going to have to overhaul their entire military, in addition to the NATO countries having to overhaul their militaries over the next 5 years because of AI warfare. Palantir's in the sweet spot of things.
I said you're right. You're 100%
Yeah,
right.
but you don't really mean I'm right. You just want to change the subject. I couldn't let you.
Okay. Yeah. So with SoFi though, okay, you said you see where they're going to end the year at in terms of revenue. Do you have expectations for full year revenue? And
No, I'm just going by what they're guiding for. And
well, why would you do a silly thing like that? You know it's going to go up.
But exactly. So I look at what they're guiding for. I padded a little bit of my mind, and that's where we are.
Yeah. Yeah.
I mean, Noto likes to look. This is a guy that did this for a living at Goldman. He was a big wig at Goldman. He knows what the street wants, but for some reason, he's doing what the street wants him to do. He's just not getting rewarded for it. Eventually, that's going to change. Eventually, there's going to be a big investor that comes in. Eventually, people are going to get excited about it. It's not just going to be Jim Cramer. And eventually this is going to work out unless something changes in the numbers.
Do
But
you want
right now, based on the numbers and based on the trajectory, I mean, the price doesn't make sense.
I agree. Do you want to go down a little conspiracy hallway real quick?
Sure.
Do you think that SoFi is getting poorly rated because it is in the industry that the people that are rating them are their competitors?
Yeah, I mean, I've always felt that that's pretty interesting that, you can have companies in the same industry place ratings on other companies that are technically their competitors. I mean,
I saw a tweet today that said, "Can't wait for Costco's rating of Walmart," something like that.
that's
Like it's silly. Like think about it.
I don't know. No, no, because look, I don't think that that's necessarily happening for the simple fact that if these big brokerage houses did that, at some point they're going to lose credibility. Now, it's fine
Mm.
for somebody to be incorrect, but they generally feel that way. And they have supporting information about why they think it's not a great investment. Like if you're genuine, that's fine. But if they do it just because they're a competitor, at some point, that's not going to be a great look. And I think people would see through that in this day and age. I mean, there's more eyeballs on everything now. You probably could have got away with that 10, 15 years ago, but I don't think you get away with that these days.
Well, I agree with you. I do think that, like I compare this to Tesla a lot. Whenever it was getting beat up in the auto industry for like, oh, once Volkswagen starts to adapt EVs, then they're going to crush this, Tesla bug. Even then, they were a 40-50 billion dollar company. SoFi is a 7-8 billion dollar company. And those same arguments were applied to Tesla, to SoFi today, of saying, hey, if we look at this as a auto company, if we look at this as a bank, they are overpriced right now. And the bulls of the time were saying, yeah, but it shouldn't be valued this way. And so, what side are we going to be on? Is this going to skyrocket up to 14, 20 plus dollars, saying this is a technology enabled, or this is a technology company with a bank
Well,
charter?
look, that's the only bear case that actually makes sense is that they never get a hybrid tech multiple
Hmm,
and they're always valued as a bank, which has
right.
traditionally been mid to high single digits, maybe very low double digits. That's the only bear case that actually makes sense.
Mhm.
Operational or financial doesn't make sense, but being valued as a traditional bank without giving it any multiple on the tech sector, that's a legit bear case, and that could absolutely happen. I don't think it's going to happen, but it could happen.
Completely agree. It's going to be a very interesting time holding these fintechs, especially into environments where rates start to come down, maybe money that is locked up in these areas that have been risk free for some time, maybe get a little loose, a little loosey goosey, maybe want to start heading up to some equity markets to find some, you know, better rates. I
Look,
wonder if it's going to be
Noto
such
needs
a
to
season.
get Derek White on the conference calls.
Just to push. So we actually, that's the one thing we didn't talk about. I was going to wrap, but let's do 2 minutes on.
We need Derek White to come on the conference calls, or you should bring him on CNBC. That would be even better. Bring him on CNBC, please.
Were you happy with the segment in general?
I was happy with the earnings call. I would have liked more about RFPs and that type of stuff,
Hmm.
but I think Derek
They
White
lowered,
needs to come on. I
they
think
lowered
that,
guidance, eh?
yeah.
They were expecting 20%, and I think they dropped it down to 18 or
Yeah, I
17
mean,
to 18.
look, deals on that side take time.
Yeah.
And I think that a lot of people don't necessarily understand what they built. And it's one thing for Noto to come out and reference AWS, a fintech, AWS, AWS, but I think Derek White can really close the gap and make everybody understand exactly what that means.
I mean, hey, it was a disappointing quarter in terms of that one segment, but financial services made up for it and more. I mean, it's
Absolutely, financial services made up for it. I just wish there was a clearer picture on this, and I wish that the industry as a whole had a better understanding of what the combination of Technesis and Galileo is, what
yeah.
Galileo does, and how beneficial it is, where we are in the process of moving everything over to the new platform, where we are in white labeling it to other fintechs and other banks, how many RFPs we're in. Like, there should be a whole breakdown on that.
Or the total amount of this is the one thing that blows me away. The total amount of payments that actually get processed. How can you be a payments company and not talk about total payment volume? I've never
That'd be
seen it,
nice.
not once.
That'd be nice.
Would be nice. But ladies and gentlemen, that has been the conversation with the great and powerful Stephen Fiorillo. You can check him out on X at Dividend Streams Rate there, or on Seeking Alpha, which is just Stephen Fiorillo. He's got quite the following there, almost like 33,000 people. Please get him up to 35,000, 40,000 if you can. Great writer, writes constantly. I can't keep up just reading them. But thank you all so much for watching. Really do appreciate your time. And bye for now.